following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. I'm really amazed that Michael Bloomberg now is really going to possibly start entering the political race. You know, there's a highway going down the middle that's huge for people who are not a big Trump fan and think Hillary is a complete criminal. So, you know, maybe that'll work out for him. I tell you what, he really has impressed me. And the more and more I've worked with Bloomberg over the years, you know, you go up to Lexington Avenue where the Bloomberg building is in New York. It's a, you know, tell you what, he's created and he shepherded it through from the beginning. He's created a very cool company without question. And for some reason, they get everybody who's in the institutional world to pay them over $2,000 a month for a terminal, and that's quite amazing too. And they can't seem to live without it. The main thing people want to use with that terminal, by the way, is the they call it the IB chat system. If you've ever, you know, kind of logged into somebody's terminal, it's kind of a different scene, but it's a very secured way for people to communicate in the institutional world or whatever. And you can find people very easily in any firm in the world. So that's really the main reason that if you ask anybody why do they have it, it's not for their charts, it's not for their, you know, bond quotes or whatever. It's so they can talk to each other. It's quite amazing, actually. So don't know if, I mean, he's talking about running as an independent, and that has nothing to do with this show, but it's interesting that there's a huge highway in the middle of all this that he could actually kind of go down, and that's amazing. Let's take a look at as long as he doesn't do his Howard Dean scream, that may work out for him. If you remember that, when Howard Dean did that crazy, wacky scream that they recorded, that was unsettling. I don't know about you guys, but that kind of freaked me out and quite a few other people, obviously. What did Ben Franklin say? He said, you can lead a man to Congress, but you can't make him think. I don't know if you've heard that one before. That's what Ben Franklin said, actually. And I think Howard Dean, crazy sound came out of that fellow that day. Anyway, we're going to take a look at the S&P futures. And I want to actually go into our e-signal charts for a second here. We're basically unchanged right now. Some crazy things happened overseas, especially in our favorite index, the Shanghai. And guys, I want you to look at this. We did close below. We went back and retested last week, and this week we kind of stayed below that all-important, let's just call it 3,000 number. And, just kind of backing up, and we want to kind of look at this in a relative sense right now. We're kind of making new lows relative to what it had made those lows before in August 2015 when we had a violent pullback. I want to say a couple of things here. I want to go into our index heat grid really quick on our scanner. And I want to go into the Shanghai. And as you'll see, this is very breadth negative across the board. But I want to show you, and just remember, I'm just going to completely get rid of the middle ground here for a second. I want you to notice, 2014 July, we started ramping up and breadth started really changing on the long term. This is our weekly. Now, when we got into this peak that happened back in, a year later, July 2015, in late June 2015, we had that breadth cross to negative. Then we had a trading opportunity. We had the rigging of the Chinese market, just like we rigged our own treasury market. for what that's worth. We were able to have some trading opportunities on the long side, but then right at the first of the year, we crossed negative, and that's where the long-term investor had to change its tone. This has been really, really clear-cut on a long-term basis if you look at our breadth calculations from the scanner on the Shanghai. So that being said, we're supposed to be selling resistance and not buying, except on a short-term contra basis, which we've had those opportunities actually. We're supposed to be kind of laying low, and I want you to look at this. This is the internals of the Shanghai, and there's so there's 180 stocks and there's 4 time frames, so that's roughly the 720 stocks or 720 different cells that you're looking at on the Shanghai. I want you to see how many are green. Ouch. I can count them on my hand. 1, 5, 6, 9, 11, 12, 13, 14, 15, 16, 17, 18. There's 18 cells on any time frame green out of 720 cells. I pride myself on being able to do addition and subtraction exclusively. That is quite amazing. All right. So again, this is after the fact. Tell me something I can use moving forward, Mr. Logan. We will talk about that. Let me go back to our index grid. So, does the Shanghai have any hope here? Let's go back into our chart and let's look at this. We're entering really a hole in the marketplace, and the bottom of that profile really is 2371, and then we've got the top of that hole at 2813. Okay, let me redo my chart here. If everybody sees this now, I'm on e-signal now. I could go to our scanner charts. Don't force me. But this is obviously, if you can see this now, this is obviously a technical breakdown on the long term again, and then a retest, former support, now resistance, and our breadth is negative. So we knew in the long term this was probably a low risk trade to try to buy these bounces. And then when we had a close below, it was actually okay to kind of step on the gas pedal on the short side again, based on the breadth and the internals not wanting to cooperate at all with any type of inflection points to pay attention to on the bounce side. Why are we talking about the Shanghai? Interestingly enough, and again, these guys can come out with crazy new measures for different innovative thought processes that they have on fixing their marketplace. But I want you to look, we had a massive run up. Some people got caught up in some euphoria, just like a penny stock in the U.S. that's been pushed by a bunch of criminals. We really are looking now at getting into the wild west here. This big hole that happened again between 2371 and 2813. So you're gonna have to pay attention to that. We're kind of in that hole right now, so we could have some super violent activity down there. So what does that mean for us moving forward? So we're going to take a look at the March contract of the Nikkei here, and we're going to explore this a little bit more when we come back, folks.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Whew, just made it back. You don't have to remind me of my age. I have a bladder to do that for me. Just remember that. Just don't have to guess my age. Here we go. Let's take a look at the Nikkei. We were talking about that before we left. And Tucker, I'm actually going to answer your question about these videos that I promised. And we had to get the scanner exactly on par where it is right now first, but I'll go over that after we talk about the Nikkei. Now, interestingly enough, the Nikkei really, again, had kind of a little bit of a violent reaction down with the Shanghai. Concerning situation there, but I want to show you the Nikkei, and I want to show you the profile, the fair auction here, and I also want to just keep that snapshot in your head. We can show this on the scanner without question. I just want to show the e-signal charts right now, because we owe eSignal a lot of money, and I told them I'd show their charts. Anyway, let's take a look at the S&Ps. So the S&Ps, we got very, very near that unfair low, just like the Nikkei, 1847 actually rounded off. Nobody's listening to me. 1847 rounded off, and we got as low as actually 51, I believe, didn't we? Yeah, 51. So again, we bounced just like the Nikkei. I'm looking at this as, again, we look back in time and we look at these indices. And I'm going to pull up our spotters in just a second. I mean, on a relative strength scale, these other indices across the globe are holding up relatively well. And if you factor out that kind of penny stock criminal ramp up that the Shanghai did, these indices aren't exactly acting that bad. And all we did was we talked yesterday about waiting patiently until we started hitting some major inflection points. 1847 being that kind of waiting point there on the S&Ps. God, why am I saying It is the S&Ps we're looking at. And if we look at the 240s, again, you got a little bit of lid now at 1880. We talked about the big resistance points yesterday being that 1904, 814. That was going to be a heavy lid there, so not to get too happy. And yesterday we kind of got into that area and came off. So, what do you do with this now? Again, I think you got short-term resistance 1880. You got big-time support 1847. I'm sorry that that's such a massive range, but there's not a lot to really pay attention to otherwise except on our 60. Now, this is our 60-minute chart. You can get this in the scanner. I'm going to pull it up. I don't think we're going to have any big moves up or down right now. This is kind of there's so many impending news events out there, and also, what's the Shanghai going to do when it opens tomorrow? So when I go into the futures section, and Steve Rhodes, if you're talking about long and strong the index, I'm actually not opposed to that. I mean, our breadth is negative on our long-term and intermediate term, but again, looking at it on a relative strength scale, it's almost like there should be more sellers in this market. I mean, just again, looking at it a little differently than the technical sense. Here's the S&Ps. Here's these situations. Here's our 60-minute. If you can see this, we've actually kind of gone back positive this morning, and short-term supports at 1870, and you got that 1880 on the 240. So you got a little bit of a focal point on those particular short-term inflection points. But again, I'm kind of more partial myself to long-term inflection points, and sitting there and drinking coffee and kind of waiting for it to happen, or drinking chamomile tea would be better, I guess, because then you're a lot more patient than mainlining caffeine all day like I do. But that's what I'm more partial to. So going back to our index grid, you'll see very quickly that our long-term breaths are still negative. We're going to open up. We're going to have to see how these short-term breaths operate here. But again, those are the inflection points to pay attention to on the index itself. Yeah, I'm kind of with you there, Mr. Rhodes. I've talked about this breadth being negative on the long term, and really simply looking at this picture as we'd rolled over and as we kind of changed tone on the internals. There's the weekly, there's the daily. We kind of changed a little bit early actually on the weekly, but as of the first of the year, this has obviously been something to pay attention to. The short term, we've actually had some trading opportunities. We kind of had some destruction of those opportunities yesterday afternoon, but on the S&Ps, but it's holding up amazingly well actually on a relative scale. Now, as I say that, I want to get into the bonds or the notes really quick. Let me go back to our futures section, because this has been something that, again, we're trying to look for relative market indicators here sometimes to make a decision on the S&Ps, and don't get glued into constantly trading the S&Ps, by the way. That could be dangerous. Here's the long term. We talked about this big level 128.28 up here. Again, we're seemingly staying below that level. If we had any big time market scary situations, I think we should be a lot higher. Think about it on a relative scale, where we were before on this rally up and then where we are now. Again, I think the notes and bonds are saying, fear factor not there. Markets may tend to rise a little bit here, especially on a contra kind of retrace back up into that 1918 area. So just pay attention to all this. Gold kind of broke my heart here. I was hoping that the 1104 would hold, and we talked yesterday, in fact, and the day before about it. This crowding action against 1104 really was something I didn't want to see, and I was like, you know what, it's probably time to lay off the shorts now, and just sit tight. Well, we actually had a decent little move above this 1104, and if we get a weekly close above there, and then I think the whole game is going to change on this particular product. So am I excited about going long gold right now? No, just going to have to wait and see on a weekly close now. And again, kind of broken stride on some profiles on the long term there. Okay, first of all, I want to Tucker had a question. Actually, let me go back to the first question. Was it SSE? Let me pull up the SSE here really quick. Here we go. 77 Energy Incorporated. So let me don't know anything about this company. Just got to tell you, if somebody's considering going long this thing, I think you could put some money. Oh my God, it's 35 cents now. John from Philadelphia, you're the one. Let's see. Okay. Again, I mean, I don't know what to say here. This is, long-term view on this. You really, I mean, bottom line is you just want to see a new weekly profile appear, and you want to try to, bank off of that. There's really not a lot of hope, in my opinion, here. It's a 35-cent stock. Maybe you can give me some insight on that, John from Philadelphia. Let's take a look at what Tucker wanted to talk about, which is, okay, so Tucker, just to prove that I do have these put together, we're going to come back after the break, and we're going to talk about some of the educational material involving the scanner. And we actually have a separate site up for that now. But we're going to get all those over to TFNN, all these videos that I'm going to show you hints of. So we'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Thanks for coming back. Steve, I agree. You're saying some things in the den there. Also, priced in dollars too. Gold is definitely had a little bit of a breakout here. I just want to see the weekly close. I'm not exactly super excited about buying gold right now myself. But those of you who kind of use that consolidation and compression up against that top of that weekly profile, gold priced in dollars, more power to you. I'm just not a huge fan of buying gold right now. It's not, and obviously I picked the wrong. SSE was a stock, a cheap energy stock, and I think John from Philadelphia was referring to the Shanghai, which I think we've already covered. So I'm going to leave that alone. So I've got relative strength weakness plays. Here's a lot of the videos that are actually going on. There you go. Tucker did a ton of these that are actually going up on a site now. We'll get them to TFNN, talking about an educational series on the scanner itself. So that's taking a lot of different things into consideration on how to use this thing you see that I use every day. And it just, again, puts a lot of, little things on my radar screen. If I want to see things acting a certain way, I do a lot of manual sorts. I do some of these custom filters, and also I like to do some of these sorts actually, and just kind of pick things out on a separate time frame basis that are acting as in a certain kind of color scheme, number, arrow area that I like to pick out. But those will hopefully be a little bit more self-apparent on some of the videos that I've done, which are done. All righty. So, I'll tell you what, I'm going back to Asia on February 11th. I think it's a Friday. And I hope that doing the shows at night will be just as good, because I'll have stayed up all day looking at the Asian markets then. All right. So one of the things I want to go over now, I want to go back to our e-signal charts. And I want to pull up really quick the XLE. I just want to kind of show you guys where this is at relative to what's going on with our crude oil price. So here's the XLE. This is our daily view on this. We got right up in the top of that profile at 55.81, and obviously we had been talking about crude oil, also crude oil, Al. We'd been talking about not getting really too mega excited about a reversal from the 20s up above 30s, and we talked about 32.73 was going to be that resistance point. We actually hit 32.74 and backed off significantly, and backed off significantly means down into the 29.25 area. So we're talking about a $3.5 a barrel move, which is a 10% move in oil off of some of those inflection points. So again, when we start, everybody's getting super excited and the worm's turning on crude oil. Remember, you really are still in a bear market, and you still have some headwinds to contend with when it comes to getting out of balanced areas here. So again, what do you do with crude oil now, and what do you do relative to the XLE? So right now we're in the middle of a fair auction. There's nothing really to lean onto here. And when we go back to the XLE, you've had the trading opportunities already happen, and we talked about some of the, how do you trade crude oil in the most efficient manner? It's really cool that you can go into the XLE stocks, and we put some really good, darts on the board. And I think got some really good wins by trying to find stocks that were trading well relative to their profiles. And we talked about the SWNs and the COGs and things like that, and they ended up working out. They don't always have to work out, but using that relative strength trading system, if you will, and having the scanner kind of pick those things out for you. We always talk about this, what's going to be the least painful trade to put on and to develop if we're wrong. So, and I hope I said that right. But I think you catch my drift there. We want to try to buy strong instruments in a situation where we think the markets are going to turn, that have already shown themselves early. So a couple of those stocks in the XLE were acting exactly right. I mean, XLE is really kind of on par with what's going on in crude oil relative to profiles. This is the XLE. So again, you can get all this information in the scanner. You don't need e-signal charts. You don't need to pay for real-time data feed. I'm going to go into my futures section and show you this. There's crude oil. There's the chart. This is so cool. There's that kiss of that 32.73 up top that it did. And, you know, you can kind of go on down the line here, but interesting that crude oil hit that almost to the tick. Really wild. And that's what it, you know, it pays to be patient, to wait for those things to develop and, wait for the market to come to you on some of these longer term inflection points. That's why I don't get super involved with the short term. And that's just the way I trade. Again, that may not be the best way for everybody to trade. So, have you guys ever flown to Asia? That is a long, long flight. Not looking forward to that. But I am looking forward to getting over there and getting on some different cuisine. I ended up losing 20 pounds immediately the first couple of weeks when I'm there, just because I don't have access to gallons of milk and biscuits. That's a good thing. And I've also found that there's really only one way to look thin is to hang around with fat people. So that's going to be a problem over there, because it doesn't seem like there's a lot of people that are overweight over there. I'm going to stop talking pretty soon. So we're going to talk about a couple more things that I wanted to show you on the radar screen here. I want to go into the Forex section, and I want to look at the Canadian dollar. This has been one we've really been talking about. It's had some incredible moves up and down. So I want to show you that, yesterday we had talked about, even yesterday morning pre-market, we had talked about this big number down below 141.2728. Waiting patiently, took some weight off here when we had the new profiles attempting to appear on the Canadian dollar. And I'm going to try to find this on our chart here. Let's see. Where's that? This one right here. The 19. Here we go. All right. So as you can see, wait a minute. Make sure I got the right. Oh, I'm sorry. I'm on the wrong one. Here we go. As you can see, it's plainly stating that on our weekly, let's see if we can get this going here. Okay. As you can see, we've been 12 weeks above the most recent breakout in a profile, and we've got a profile attempting well below that happened a couple of weeks ago in the Canadian dollar. But we had that yellow peel back happen back, what is this, up top, around that 145, 144 area. That was a kind of an indication of profit-taking mechanism. A profit-taking mechanism. Hold on. Let me remind somebody of something. We'll be right back after break. We're going to hit the Canadian dollar and finish up with this.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, guys. Welcome back to the show. And I think we've got Dave from Clearwater on with us.
Morning, John.
Man, I owe you an apology. We're going to...
I'm feeling like a stalker, man. You keep calling. Like, man, there's got to be a law against those.
No, it's wonderful to hear from you. Always. I just was scrambling to try to get some things off the table as far as this scanner, and I think we've done a good job. So now it's time to talk. And
real quick, like, because I know that time is short. You talk about the flight days. The longest airplane ride of my life was between Chicago and Shanghai. And I was sandwiched between 2 elderly Chinese nationals, a couple, been married for, who knows how long, hygiene deficient, looked like they haven't brushed their teeth in decades, and both of them about halfway through the, 12-hour-plus flight, pull out a bowl of fish head soup, and just the stench, John. The stench was just unbelievable.
And don't forget the prune candy.
Oh, yeah. Just, about halfway through, John, because the flight was based, I guess the crew was based in Chicago because they were all Americans. And about halfway through the flight, you could just see the look on their face. They're like, we're just not getting paid enough for this flight. It was that whole the smell on the airplane was horrendous.
Try it 3 or 4 or 5 times a year. That's a good little marathon.
Oh yeah, no doubt about it. But anyways, I know you're real busy, John. So I just want to ask you a quick question because I've been traveling quite a bit myself, and then I was wondering if I could send you an email with just like 2 or 3 questions on it.
Yeah, man. We can talk also. This I know this is. Yeah, I've actually finished a lot of videos. We're going to have them up and get them to TFNN immediately on the scanner. A couple of how-tos and how to ring the register, hopefully, with this thing. But yeah, what do you got right now? Shoot.
Well, I think you answered my. I think you just answered my question because you mentioned these videos because I'm trying to wrap my mind around how to use the task scanner because I feel like it's another potential tool in the toolbox between the things I've learned from Tom, the things I've learned from Larry.
It's a great enhancement. Yes.
Oh yeah, no, I've been watching some of the podcasts and I'm just like, wow, this thing is really slick. It's almost like a mathematical graphical representation to some extent of what Tom does because it seeks out the volume, plus 1 deviation up, 1 deviation down, and with my mathematical background, I'm kind of digging it.
I think that's so true. I talk to Tom about this all the time, and combining some of the things that he does with some of these confirmations, and Steve Rhodes and all the other guys. I mean, it's just I love to, we don't say this enough, but I love to just wait until it's kind of the stars line up, and that this is kind of another piece of the puzzle for that. But yeah.
Well, I've had a greater degree of success when I learned to wait.
Yeah.
That's been the hardest thing for me, because like you're looking at the screen, you think you're going to miss it, and discipline and patience are key. And Tom tried to beat that one into my head in a one-on-one conversation about 5 years ago. He's like, Dave, you got to learn to wait.
Yeah.
And, he about wanted to smack me upside the head because I was just giving money away because I wasn't waiting. But, okay.
Well, I learned that the hard way. I tell you, nobody's immune to trading too often. I learned that the hard way. And every time I kind of get out of my wheelhouse, I lose money. So go ahead. Yeah, I'm with you.
Yeah, no doubt. And that lesson I've lost, I won't go into it, but a lot of money learning that lesson the hard way.
Yeah.
But I think you answered the question. The videos that you were talking about, those are going to be on the TFNN website?
Yes, I'm going to get them all to Tommy, I think within the next 24 hours. We spent some time on it. We've got a kind of a separate site for the scanner for other purposes, but we'll get all the videos over to TFNN, and probably do another webinar pretty quick here, because I think we haven't done anything since the charts are in here. And my dream was always for people not to be able to have to go to another piece of software to use the thing. And believe it or not, we actually are going to take some of the charts. This is kind of a snapshot chart situation that as you can see, I'm showing Apple right now and just showing the different time frames. We've got an entirely different charting package that we wrote specific for it's kind of like a NinjaTrader or whatever. We're going to grab the charts out of that package and actually have those as an accessible module within here instead of these. This is something we wrote from scratch here, just to kind of get something up. But we're going to pull those modules into this scanner too, which will be even, it'll have even more technical indicators on there other than just our profiles that you'll be able to use. And we're constantly working on this thing to make it better, or to make it more discernible, I hope, for everyone out there, to get some better visuals. I mean, I don't really use the charts, Dave, a lot. I just kind of read the colors and the arrows, and I look at things that are attractive to me in the color scheme that I see. And it takes a little while to get used to that. We'll talk about that in the videos. But I use internally, for me, a relative strength trading system inside, and I want the market to make these kind of drastic moves so I can get some clarity on what's showing their self either way. Part of the game is trading some underlying futures, the crude oils of the world, the index futures of the world. But I like the stock game as far as things showing themselves, not wanting to be sold or not wanting to be bought in certain market conditions is in my opinion, a really cool way to go. Tom will talk about that also.
Gotcha. So for this, and I would have had this figured out by now, but it took me a little while to figure out a workaround with my Apple computers, which I finally did. But cut to the chase, specifically on the question. On the task profile service through the TFNN organization, is that when you buy that package, that service, that monthly service, is everything that I'm looking at available through that, or does it require e-signal in addition to that? Is there any other additional? No,
that's the beauty of this thing. I mean, I showed this to a lawyer out in California yesterday. And he travels, he does a lot of business in China and all that. He goes, wow, man, to get all these different markets, you must have to pay a lot of money in exchange fees. I said, no, you don't have to pay anything. What we take is, we don't actually show the price. We show the price derivatives, like as prices are moving. And that's a great question, because this is the only product within the Bloomberg Institutional App Portal within the Bloomberg Terminal that's been allowed by Bloomberg ever to use an outside data feed to populate a product on their system with, which is incredible that they legally allowed this, because they know that their data, people can't, the scanner can't be populated with their data, because their terminals you would actually have to pay extra data fees, not just exchange fees, for just the amount of data that you can pull from a Bloomberg terminal to actually populate something like this. So we basically aggregate everything in the globe in a real-time exchange print, create these real-time derivatives that are acting within 60, 100 seconds, something like that. And also, with the charts now, you can get a chart on anything in the world that's in the scanner. I think it's over 3,500 instruments now. A real-time view, or a 60, 100 seconds delayed real-time view, of everything from the, something on the Nifty 50 to something on the TIE Set 100. Dave?
Gotcha.
Thanks for calling, man.
Thanks, John. I appreciate it.
Yep.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, guys. Welcome back to the show. Great call from Dave from Clearwater a while ago. I thought we were able to talk about some things that maybe some of the folks out there aren't really aware of. So when I was talking to the lawyer yesterday about this thing, he was like, my God, this is amazing that, you get to actually get all these quotes and get some real-time updates like this without having to pay all these exchange fees, which is cool. So going back to our dashboard here for a second, what I wanted to do now is, we actually had some stocks that were, we had the market coming in yesterday. I'm going to go back to my e-signal really quick and go back to the S&Ps, and they're positive right now, which is really, really wild, and I think extremely bullish, actually. Remember, we talked about the inflection points you got to be aware of on the short term, 1880 and 1870. We're kind of stuck in there right now. We're kind of trading above 60-minute profiles and trading below 240s. But remember, this morning we reversed pretty much off the neighborhood of the bottom of our most recent daily profile, which is 1847. We hit a low of 1851. So kind of in a no man's land situation here right now. I'm a little bit more biased towards the long side than I am the short side. And 1880, if we can get above there, I'm going to look at that as support. Actually, this is a pretty interesting move relative to what happened in China. And again, this particular index has been holding up extremely well relative to what the carnage has happened over in China. So, any types of good news out of China, seem to inflate this thing, and any types of bad news just kind of tends to, tick down at worst. So again, I'm looking at it that way on a relative strength type scale. So we talked about Howard Dean. What else did we talk about? Just joking. I didn't really finish with the Canadian dollar. I want to go back to that because we've only got 2 minutes and I can't really get into any big stock plays. So as we look at the Forex here, going back to the Canadian dollar, what do you do now? Again, I'm looking at this floor here around 141.28. We had a really cool bounce off of that. We got as high as 143.18, 19, somewhere up in there. This is our 60-minute. I'm just kind of pegging the upward move price against that profile. Remember, we can't give you real prices in here because then we'd be we get sued. Put it that way. so as we look at this, that's the situation on the Canadian dollar. I'm still looking at that as big time support on that. And crude oil languishing around down here is not going to be good for that. So that means the devaluation. That means that chart will go a little bit higher. So again, I'm looking at Orient and stops. We've had a really good pullback here. 141.27 stops below based on my appetite for risk. Whew. All right, so let's take a look at our weekly and daily sort, just a real simple one. What's still trading above profiles? And also, if I wanted to pick out neutral here on our daily, I can sort this, and I can look at some things that are kind of like sitting. Let's take a look at this one, AIV. And I'm looking at this, just kind of reading the colors here. Sitting at the top of our weekly profile, bottom of our daily. So let's just take a look at AIV. Why do I keep going back to E-signal? Why? I'm going to pull up our scanner charts. And here's our weekly. First thing I want to start out. So we've pulled back to a pretty decent little area here, 37.57. Again, still sitting right at a nice little dual time frame inflection point situation. This is something you can get a little bit of a trade on here above this 37.66 on our daily and then this 37.57 on our weekly. So this is one, again, just kind of reading the matrix here, something to pay attention to on the long side, AIV, for a little bit of a trade bounce. Guys, thanks. Stay tuned for Larry, Steve Rhodes, David White, Daryl Martin, Tom O'Brien, of course, Andy Heck, and Basil Chapman. Don't miss them.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
is TFNN.